Hey everyone, it's Lindsay Vallandingham with the Symphony Group at Keller Williams, Louisville East. It was, by all means and by anyone's definition, sort of a rocky and tumultuous real estate market in 2023. There was certainly buyers and sellers still in the marketplace, moving forward, making purchases, and in fact, there were almost 5 million transactions that took place in 2023. We talk about the idea that some sellers are handcuffed to their mortgage rate or handcuffed to their home because they did purchase or refinance at a time when interest rates were historically low. And the idea of then moving away from something where they are locked in at 2.5% or 3.5% interest rate becomes almost impossible, right? With just the idea that someone might have to suddenly pay 7 or 7.5% interest on their mortgage means that moving is that much heavier of a lift. As a result, our inventory suffered. Our inventory was already tight and already at a really low level as we entered into 2023, where we might have seen some rebound by a slowed buyer's market. We didn't experience the rebound in inventory because we had so many sellers that were not able to list their homes and move. So the issue compounded upon itself and inventory remained really, really tight throughout all of 2023. As we start to look at what happened, we can't avoid the conversation around inflation. Inflation was probably the number one word used in the media to describe our market in 2023. Inflation was that term of the year. We all heard it. You couldn't turn on the radio or turn on the television without hearing about how inflation is impacting our market, everything from our consumer goods to our jobs to our housing and everywhere in between. And the real estate market was not spared from that, of course. Inflation rose so significantly, where the Fed tries to keep that inflation rate at about 2% year over year. That's their goal. We saw inflation skyrocket to over 6% in some cases. And what that really means is that things become less affordable for each and every one of us. And that's, again, everything from groceries, clothing, experiences, and of course, to our homes. What we are seeing as we move toward 2024 is that inflation is rebounding, coming back in check. We seem to be headed back toward that goal, that trend line of 2% inflation. It doesn't mean that prices are coming down. It just means that things will not escalate in price as quickly as what we've seen over the past 3 or 4 years. No one expects, I think, a return to what pricing looked like in 2019. But what we do think is that we will not see prices continue to escalate at the rate at which they have been escalating. That is going to give the rest of us a chance to catch up, to catch our breath, for our employers to catch up to where we have been as far as what the cost of living is. The goal, the hope is that in 2024, we see a little bit of a reset and we see things kind of come back to the desired 2% to normal. And so how does that impact the real estate market? Well, with the lowering of inflation, the Fed can then stop raising interest rates. They were raising interest rates as an effort to curb inflation. When interest rates go up, consumers can afford less, and when they can afford less, they buy less, and the cost of things does not continue to skyrocket at that level. And so therefore, interest rates can come down when consumers start purchasing less. And when interest rates start to fall, we do expect that there will be more buyers entering the market, more of these sellers who were previously handcuffed to their interest rate of 3%. If we do see a downward trend in mortgage interest rates, then we can start to see sellers that can move, sellers who are able to look at the affordability options. As sellers start to list their homes, our inventory improves. That means there are more options out there for our buyers to choose from, and the real estate market then starts to regulate and settle as well. When we look back at home sales in 2023, home sales were significantly lower than what we've seen in recent years. This is the number of units sold. So we're at 4.3 million units sold as our projected number in 2023. Now, this data that we're looking at is from like the end of the third quarter of last year, but that's where they were projecting that we would end up by the January 31st date. So as you can see, that is significantly lower than what we've seen in recent years. Yet it's not all that dissimilar from what we've seen in the past. So that is a number of sales that has happened multiple times over multiple years in history. And yet, because of what we had seen in the years leading up to that, we could feel like there were a lot fewer homes being sold. Now, as the market tends to open up, as interest rates fall, there is the anticipation that moving forward into 2024, we would not see the number of home sales continue to decrease further. I don't know that we're expecting a tremendous leap, but I think that we are expecting normalization and continuing to slightly increase. You know, if inflation is normalized at 2%, then maybe we do 2% more home sales. Last but not least, home prices. If you have been anywhere with a TV in the last 4 years, you know that home prices have absolutely skyrocketed. What's interesting about that is that we look at a historical trend line of 4% increase in home prices as being our average. Historically, if you go back, the price of home sales follows that trend line pretty well. You can see in 2008 and 2009, prices dipped because of what was going on in the real estate market at that time. Over time since then, prices have rebounded. And then finally, after the pandemic, we actually reached the point where we should have recovered to our 4% trend line and even surpassed that a little bit. As we look at 2023 projections, you can see that we're starting to come back to that trend line a little bit. And I think the anticipation is that moving ahead in 2024, that we will continue to regulate because, again, historically, we're looking at 4% over time. That doesn't mean that prices are falling. It just means they're not going to continue to rise at the incredible rate that we've seen over the last 4 years. We expect that home prices will regulate such that we will return to only seeing a 4% home price increase year over year on average. I hope all of this makes sense. If you have individualized questions about what this means for you, I would love to enter into a conversation at any time. I enjoy learning as much as possible about this, and I want to be your economic expert to make sure that you are making the best possible purchase that you can and building your wealth through real estate over time. We would love to help you find your perfect key. Please send us an email at symphonyrealtygroup@gmail.com.